In this video, traders, we're going to look at the VWAP Breakout entry trade setup with distinct rules for your stops, your targets, your filters, and your triggers. Stay tuned. Hey traders, very warm welcome to you. So if you're subscribed to the channel, you'll know that I like the VWAP. It's one of my favorite indicators to use as a day trader. I think there's nothing more powerful than using that volume weighted average price, because I know that a lot of algos are programmed based on the position of the VWAP. I know, or should I say the price relative to the position of the VWAP. I know a lot of funds are looking at it. I know a lot of other people are looking at it. If they're looking at it, I want to look at it because I want to try and second guess what those guys are going to do, because that's how we make money. Okay, so this is another way of trading the VWAP. Now, the VWAP is, as I say, very, very useful thing to have. If you're trading cryptos, it's handy. If you're trading currency pairs, it's handy. If you've got a volume feed, that is, and most charting platforms or brokers will give you an aggregated volume feed that you can use and put the VWAP up on. Indices is very, very powerful on. It's one of my favorite kind of groups of markets to trade it on. Individual stocks, very, very powerful on. You're better off using it during regular trading hours rather than 24-hour sessions. So if you're trading the European session, you've got 8 o'clock till 4:30 UK time, 2:30 till 9 o'clock UK time. If you're trading the US session, obviously adjust that for your local time zone, wherever you are in the country. And we've got a lot of supporters all around the world, and much appreciated to you if you are watching and are subscribed to the channel. Okay, so let's get down to it. The rules for this are, number one, the current range has got to be less than the ATR in a 14-period setting. What does that mean? Okay, so what we're trying not to do with this is because we're buying this a little bit late in the move, the whole point of this is we're identifying intraday changes in sentiment. Okay, now the best place to identify that would be at a low. Obviously, if you're going from a high to a low, and we identify that and we look for right, that'd be fine, that'd be perfect. This is more of a systematic way of saying, you know what, this change in sentiment has happened. Now I want to get on board for that final squeeze right up to the close. That's the deal. That's what we're trying to do with this trade. So this rule, this filter, should I say, and actually these here are more our filters, guys, rather than our triggers. You know, I like to split it up into that. So filter, current range distance. So on a daily chart, we're looking at the average true range on a 14 period. In other words, what that's giving us is saying, okay, the average range for the past 14 days has been 100 pips, 50 ticks, 100 ticks, whatever it may be. But the point is, we want to make sure that the current range of the day is less than that. And actually, you'd probably want it to be less than 70% of that. So in other words, if the average true range is 100 pips, we don't really want to see already a range of 100 pips or even 90 pips or 110 pips. Now, if you want to add some extra rules into that to allow for extreme outlier days, feel free, of course. But what we really don't want to do is be chasing something that's a little bit too high already. It's already done a big range. We want to be a little bit cautious with that. All right. So number two, not in the first or last hour. So what we don't want with this, VWAP takes a little bit of time to get some juice into it. Don't take it in the first hour, because VWAP just starts gathering some trade information and starts to then just be actually a true representation of the most volume traded, or the volume weighted average price. And we don't trade the last hour either, because the last hour really is a little bit of a mad scramble, and sometimes you can get whipped out. And you want to trade it in that little sweet spot intraday. Okay, what else I want to look at here? Number three, price has spent greater than 70% of time one side of the VWAP. So what do I mean by this? What we don't want to see is something that's been chopping around the VWAP. By the way, this purple line here is our VWAP. What we don't want to see is price chopping around the VWAP. This is no good for that kind of thing, because you're going to get faked in, faked out. You're going to take 100 trades. You're going to say, what are the most useless strategy? You want to see something that spent a lot of time away from the VWAP. Now, it could have been from the high side, could have been from the low side, but 70% of the day, and again, tweak and adjust this. You can eyeball this, or you can have a program that does it, whatever suits you best. You just want to see and say, hey, you know what? We've traded quite a lot of the time above the VWAP. Maybe we've gapped up and traded above it. The VWAP's kind of catching up to stuff. It's been an uptrend, and now we're trying to kind of change sentiment slightly. So we're looking for that change in sentiment. We spent a lot of time above the VWAP during the first day. We're not in the first hour, and the current range so far is less than, should I say, the average true range on a daily chart for the last 14 days. And again, you can play around with that, but this is kind of some of the benchmarks I like to use. And that just stops us chasing stuff too much. One little caveat to that, guys, is that, let's put a little star there. One little caveat to that is, Okay, if we're seeing a decent reversal that's coming back into a range that we've already done, so let's say you've broken through the VWAP once already and you're coming back down a second time, then you can remove that filter because you're coming back into a range that's already done. If it's the first time through, i.e. this one, we spent a lot of time below it and the VWAP, then we start to drive up, now we kind of have to use that filter. So you can adjust that to suit. Right, let's get down to the rules and the triggers. So number 4, the first kind of trigger is on a 5-minute candlestick chart, and this is a day trading strategy, so we're going to use a 5-minute chart here. You could play around with the 15, but I think 5 is a sweet spot. But again, let me know your thoughts in the comment section below on that one. On a 5-minute candle close above the VWAP, this is for longs, we are going to buy. So if we zoomed in on this little bit here, there's a VWAP, there's price crossing the VWAP. Let me just put that clear there, that's our price. Price is crossing the VWAP, there's our candlestick. As we get the close above on the 5-minute candle, we're in on our long trade, or if we're the other way around, we're in on our short trade. Right. Now, the thing with this, guys, is that the probability of this working is, to be honest with you, it's going to be on the lower side. We're not talking 80%, 70%, it's probably a 50-50 shot, all right? But the point with this one is that you are trying to identify distinct change in momentum intraday. And if you can identify that, we're going to talk about stops in a second. The stop is so tight that this thing's going to give you 10 to 1s. And if you can get these 10 to 1s on a 50-50 shot, I'll take those all day, every day. It might even be less than that. It might even be 40% success, whatever it may be. The point is we are adjusting and allowing for that kind of probability by having a decent risk reward ratio. So we've got our buy. Now we're going to have our stop. Our stop is equal to the low of that candle that broke as the trigger candle times 1.5. So in other words, the range, add another half onto it. That's going to give us. So if the range is 10 ticks, it's going to be a 15 tick stop below that low. Okay, so that's the way we're going to trade it. And our target is going to be the closing bell. So it's a reasonably tight stop because it's talking about 5-minute range kind of stuff. And we are going to hold this right the way till the close. If you want to add a trailer on it, fine by me. If you want to kind of adjust some scale outs, fine by me too. But in my experience, if this is a genuine trade that has worked well, i.e. we've changed the sentiment intraday, we've broke through the VWAP, you've taken the trade, you've got your stop, it will run and finish at an extreme, and you're on the right end of it, so you want to hold it right until that closing bell. Just for the closing bell, take it off. Now, of course, if you want to hold it for multiple days and that's part of your strategy, again, I think that's fair enough. But the important thing is don't sell yourself short on this trade, because, as I say, the probability of success is probably slightly lower. You don't want to be taking kind of 1-to-1 risk reward ratio, 2-to-1 risk reward ratio. You want to give yourself that higher possibility of getting a really decent chunk out of it, a 200, 300 pip move, whether over multiple days or whether it is an extension of today. So you've got a 25 pip stop, you're kind of looking for 4-to-1, 5-to-1, whatever it may be. So have a little look at that and adjust the rules to suit your star strategy and trading plan. But the VWAP is very powerful. This is a different flavor of taking it, compared to the VWAP fade trade. The VWAP fade is a different way of taking it. This is a more breakout trade, but we're using the VWAP as a benchmark, as a kind of line in the sand that once breached, we're assuming the continuation is going to happen. If it doesn't, we've got that nice tight stop strategy below that low. If it does, we're in good position for an extended move right until the closing bell to take as much juice from the trade as possible. All right, guys, take care. See you in the next one. Keep the risk managed, whatever you do. Bye-bye.